Today, I want to talk about the narrative that's going around on the markets now. That we're obviously, I think it's like 99.9% we're going to have a cut in September. And I think we're up to like 65, 75% that we'll have three cuts in by the first quarter of 2026. Okay. And this is all predicated on weak employment numbers. We're at 4.3%. I'll remind everybody for the last 100 years, we average, it's 5.7. I know I said 5.8 in the past, 5.7%. We're at 4.3. And we're up from 4.2 to 4.3 because we just made a political appointment into BLS. The guy has no experience, has a total Magda, and in 1 week, man, down 911,000 jobs. Amazing, okay? All because inflation is going up, so you're not supposed to cut your rates. All our assets are at all-time highs. We have stock market, Bitcoin, crypto, gold, silver, housing, everything's at all-time highs, and we're gonna cut our rates? Right. But let's look around and see what's going on around and see how this is going to work out. So here's the countries that we're going to look at today. And we're not going to put in China with the renminbi because it's a closed system. So it's kind of hard to build comparison charts given that they have a controlled currency, controlled bonds. We just can't do it, all right? Now, if you notice here, this is pretty interesting. 5 of the 6 here, if you look at the black line, these are the short-term rates, the 2-year rate. And notice they're all turning over, even though Italy here in the last week or so has moved up on their 2-year rates. And Japan has, under Ueda, has been raising their rates, and they've stopped because of the tariffs. But notice their 30-year continues to go up, okay? It's at 321. The issue with that is the inflation rate in Japan is 3.7. And as everyone who follows this channel knows, you get 1 point for inflation and a half point for term, how long it is. So you should be 1.5%. Your yield on your government bond should be 1.5% plus inflation rate, okay? So obviously, there's not one country here that is doing that. And remember something, the governments can drive down the short-term rates. They don't have control of the long-term rates. And this is the chart that we used last week, and you can see all the 30-year bonds are going up, except for Switzerland, which everyone knows that follows us, that this is considered a short-term alternative currency. So when they don't know where to go, what do? So I just want to remind everybody, there's 4 major buckets of money that major asset managers, not you and me, major asset managers feel that they can go to and not effectuate prices. That would be the US, it would be the Euro, it would be Japan, and of course, China. And China has its own issues, we know that, so we're not going to deal with that today, okay? Let's deal with what we can in front of us, all right? So when you look here, we talked about France now twice in the last 2 weeks, and anybody following the news, you know what's going on there. They are rioting in the streets. They don't want to cut anything. We saw before, they're the #1 country in the world with 57% of GDP expenditures. What is going to happen there? And the reason that this is important, this is what I want everyone to consider because of the 4 buckets, okay? We have to sit there and say, where will we go? And what do I mean by that? Well, listen, we can say that Japan is in trouble, and they are. Today Japan had their 48th intervention, as they call it. Remember what the intervention is. It is the BOJ, the Bank of Japan, who signed an agreement with the U.S. for a currency swap, giving dollars to the lending dollars to the Japanese institutions they can meet their margin calls. So in the last 4 weeks, 48 times, okay? And when you look at America here, our Treasury, not the Fed. The Fed does QE, the Treasury doesn't do QE, supposedly. And so as everyone knows, this is not QE. They're taking the interest that is earned by our federal balance sheet of, what is it, $6.5 trillion. They take that interest, and they go to the open market, and they've been buying in the open market the U.S. 10-year bond. And as you can see here, it's at an all-time record, okay? We're 138 billion that we bought so far this year, where last year we bought 79 billion for the whole year. And look here, if you look at our 10 years, see how it's turned over here? Is it because our unemployment, or is it because Bessent has bought $138 billion worth of the 10-year in the open market, controlling the interest rates? I don't know, you tell me. So I want you to think about something. Yes, there's money to be made here, but I think it's going to be made if we can somehow figure out the sequencing, okay? So let's give it a narrative on what the possible sequencing is, all right? So let's say the Japanese 30-year continues to go up, continues to cause problems for the Japanese institution. So they've been borrowing, and when they run out of assets, collateral, to get more dollars, then they have to sell. So they sell, and we know they own $2 trillion US, 1.1 trillion in government bonds, 900 billion in other securities. So do they sell the treasuries? Do they sell the other securities? And when they sell that, think what they're doing. They're actually selling the dollar, and they're turning around and they're buying the yen so they can bring it back and give the money to the institution so they can meet their margin call. That would be the first sequence. Or is the sequence going to be this? That because France can't reach an agreement, and Britain is hurting, but Britain's not in the euro, but France can't meet it, and if you've been watching the television in France, half of the riots are they want to pull out of the EU and out of the euro. They're literally, that's what they're rioting in the streets. So let's say France pulls out of the euro. So people then sell the euro, and what do they buy? Do they buy the US? Do they go buy Japan? Where do they go? What happens if Japan and Germany go at the same time? It's possible. I'm not saying it's going to happen. I'm saying, what are the narratives that could happen? What sequencing are we actually looking at? And so when you think of these big asset managers, they're sitting there going, well, which way do I go? Do I go with the U.S., who's now firing all the Fed guys so they can lower the interest rates? They're doing QE again, or whatever you want to call it, stealth QE. Do I trust them? Do I trust Trump? Do I trust Bessent? I don't know. Do they? What are they going to do with Europe? Do they sell Europe? Do they buy Europe? And think about it in Europe. They're already bifurcated. Now, it's on a political, military level, but they have the coalition of the willing. That means not everyone's willing. So the euro and the EU is kind of already breaking up, all right, because of all the issues going on there. Japan, with inflation, the debt and everything. So when you think there is going to be some kind of sequencing, do we screw up America so badly that we drive the euro and the yen up before they break and then everything reverses? I have no idea. This is in times that we've never seen before. All we know is that we absolutely have a sovereign crisis. But let's look at what the currencies are doing. Look at the pound. It's basically flat. Look at the yen over here on the right. Basically flat. Look at the euro. Basically flat. So what do I think this means? No one knows. They're all trying to figure out the sequencing. That's why all the currencies are flat. The bonds are moving, but not the currencies. They haven't chosen yet. What do you think? Which way we're going to go? tell me in the comments and like and follow.